Alright guys, so welcome back, and right here we have gold, the almighty gold, our most favorite precious metal. So welcome back to gold, and what do we have here?
Boring.
I always ask that question, what do we have here? So yesterday I said we noticed this breakout yesterday, right? And I said I want to say pullback. The same thing I was explaining on WTI, that I would like to see a pullback out of the broken structure. Okay, but fortunately for WTI, it broke above resistance. Fortunately also for gold, it broke below support. So, and now the pullback is actually happening. And don't forget the US PMI data, okay, that came also yesterday. It fueled the pullback. Okay, it helped fuel the pullback, and I really like that. That's the kind of thing I like to see fundamentals do for me, not to change the whole trajectory of my setup and then give me something I don't quite understand at all. Okay, so right now we have this setup. We have our Fibonacci already placed and positioned. So first thing I want to say is to see how the market react to 38.2% Fibonacci retracement level. Okay, I want to see how the market react to this level. As you can see, the market look as if it's gonna be in a channel for a while. Okay, probably it's gonna be in a channel until it touches 61.8%. I don't know. Okay, but that's how it looks to me, and I really like to follow through. So I want to see how the market reacts to 38.2% for one. Okay, and then secondly, if it's gonna break it, I want to see how it's gonna react to 50%. If it broke that, I want to see how it react to 61.8%. Don't forget, we are still very, very bullish on gold. Gold is still extremely bullish. As a matter of fact, let me show you how bullish it is. So right here, okay, so if I try to extend this trend line, I don't really love or fancy trend line like that, but I like to use them because they makes my job pretty easy. Okay, but they don't really play that very much role in my analysis or in my trading setup per se. But I like to see them. I like to use them for just to guide my thoughts. Okay, just to guide my thoughts and to see the overall trend. So right now, if I don't use trend line, I will use 200 period moving average. Either I use 200 period moving average or I use the trend line. Okay, it's either, because I need to see the overall trend. And if I draw the 200 period moving average right now, it will look like this. Okay, and now you can see the market has crossed below it. Okay, and maybe in a couple of minutes you just see it turn. I mean, a couple of hours just turn it. If peradventure gold decided to do what, to go down. All right, so it's either I use 200 period moving average or I use trend line. So what am I trying to explain here? The overall trend is still very much bullish, and we're gonna keep that in mind. All right, but don't forget, this major key level right here is broken. It's a major key level, it's a major support. Okay, because the market was doing higher high, higher low, higher high, higher lows, higher high, higher low, higher high, and then it come back here. We've not seen a break above this new high. All right, which is our current all-time high, and that is 24.31 32. Let's put it that way. Okay, so 24.32 basically. Okay, we have 24.32 as our all-time high as it stands now. Okay, and so what was I explaining earlier? We've not seen a break above this, and the previous support that we had on our hands is right here, and that support has been broken. It was broken yesterday. Okay, so that is something to take note of. All right, and now that we've seen that, we could, let me enlarge the chart so you can see it very clearly. Okay, I think that's big enough. Okay, moving forward. So now we have this level right here broken. Yeah, it's been broken, and we have this pullback trying to retest it. It's almost at 38.2% because I have a notification right there. Okay, I'll be dropping a couple of notifications on 60% and 50% as well, but Personally, I would really love to see it at least at 50% because that is a more discounted price. I said all this drop was around 1078, right? Or let's say 1000, let's just say 1078 based on what I calculated. I want to see half of it being corrected, and that should fall around 50% or what, or 61.8% basically. Okay, that should be like half of it. 50% should be the half of it. If I can get 61.8, that will make it more interesting. Okay, that would be like how many pips correction? 61.8. So let me see from here all the way back to, so that should be around exactly 700 pips. Okay, that will be a correction of 700 pips. I really love to see that correction. Okay, so I can take the further sell all the way down. All right, so I'm looking forward towards a discounted price just to sell. That's all. Okay, right now I'm looking to sell, but that's not the only thing that could play out here. Market can as well just do whatever it feels like doing. So if peradventure I get something like this, okay, if this trend line got broken, I'm going to do it eventually. If it got broken, I will take that short, even if it doesn't touch 50% or comes to 61.8%. But if it goes back to 50%, I'll still draw the trend line. I'm still going to draw the trend line, okay, and I will still wait for break of it, pull back, and then I will sell. All right, if we now went ahead to touch 61.8, the trend line will still be very active. It will still be there, right? I will wait for break of that trend line, pull back, and I will sell. All right, that is it. But the moment it's touching 78%, 78.6%, I might not be taking any sell trade again, because that will ultimately take the whole thing back to what? Into the range. Okay, it will turn this area to what? A false breakout. Okay, which will not be suitable for me to take any action anymore, because we are back into our no trade zone. Okay, and I wouldn't want to do anything to jeopardize my portfolio or my capital and put myself in unnecessary drawdown. It doesn't matter, I don't like it. Okay, so I'd rather just stay in my own lane and see where the market takes me, and then I'm gonna follow it slowly after that. So based on what I've explained earlier, 3 setup, I can take a sell at 38.2%, I can take a sell at 50%, I can take a sell at 61.8%. Okay, all has to be what? They have to break this trend line, pull back, and then I will sell. I've said it a couple of times. My ultimate target is at 22.23. Okay, 22.23. That should give me roughly around plus 800 pips. Okay, as target. Honestly, that is where I will be targeting if I'm selling. Okay, because the market could change this trajectory now and start going up. I don't know what's gonna happen in the next 10 minutes. But if it happens that I sell, I'll be targeting 22.23. Okay, that's my ultimate target. Okay, and now that's the first place. That's the first phase the market could take. Secondly, if the market bounce back inside this range and then continue to range, all right, I'm not interested. And the stretch part of it is the market bouncing back inside the range and then break above the resistance and then start going up. But that would be a whole different thing to look forward to, okay, or to look at. But I'm not saying that could not happen. That could definitely happen. It might happen. But I will still what? I'm just gonna wait to see how the market unravels and to see how I can better position myself to take a trade. Basically, that's what I'm gonna do. But right now, I am more positioned to take a short trade than a buy trade. So I'm gonna catch you in the next video, guys. See you tomorrow. Trade safe. Bye.